They believe that they're still, when it's all said and done, going to have the best operating margins in the industry. A couple different brokers. I looked at, again, I echo Piper Jaffray has a report out there where they say every time wait times in Tesla cars go down to 4 to 6 weeks, they cut prices. And they cut prices because they know they can and because they think they can outlast everybody else. This is offsetting EV credits that are going to lose ground, too. So, again, I hate the multiple. I don't need to chase the stock here. It's of all the mega cap tech stocks, it's the one that is still in its downtrend from November of 21. It has not broken back above it, and I don't see that it will. But today's, the margin number today, no one should be surprised by that. And Tesla should be arguing this is exactly what we want to happen.
Yeah. Karen?
So the stock act's pretty well given,
yes.
Actually. I'm sort of surprised that it's not down more. So like Tim, I'm not going to die on the Tesla hill. I wonder, though, about this continually cutting prices. At some point, do you train the customer to wait? Right? If you're a customer who bought a Y not that long ago,
right.
You're not going to be happy with this.
5 cuts ago?
5 cuts ago, exactly. You're not going to be happy about this. And I don't know, might they wait? I'm sure a lot of thought goes into the price cuts, no doubt. But it's a kind of it should be a worrying trend as we see margins go down, obviously.
Yeah, I would argue, along with Tim, that you shouldn't be surprised that you're seeing margins thinner and you're seeing some margin compression. But there was debate about whether or not they were going to be able to maintain around that 19.5%, 20% margin level. And they're coming in below that, keeping in mind that these peaked out around 29% last year, right? So like year over year, that's almost a 10% decline in terms of margin. And then when you couple in the CapEx spend that they're ramping up, right? The further and further that you push this off and it becomes more of a volume story than a profitability story, the accretiveness of that CapEx spend gets pushed out. And that, to me, is why you're starting to see downward pressure on the stock immediately when a lot of retail investors have a tendency to buy on any type of weakness.
Then just one thing to add, though. All of this to synthesize it, what's the right multiple? Is it in the mid-40s for an auto company? I mean, that seems really high to me.
For an auto company in the next technology of automobiles, right?
Right.
The technology that the others are trying to catch up on.
True.
It's got the pole position right now. It's got the edge in terms. And I'm just playing devil's advocate. Nobody's dying on the Tesla hill here. Certainly not Dan.
Let me give you before Dan jumps in because I know he's got a lot.
One with the edge of the battery technology. I mean, maybe for these reasons, it deserves that multiple because catching up on that technology aspect is going to be so difficult for the legacy automakers. Well,
one other thing that, again, I'm not dying on this hill, but they're talking about growing 50% CAGR in terms of deliveries. The more they grow, and they said this, they said Q1 profitability was positively impacted by growth in vehicle deliveries despite margin headwind. They're going to argue economies of scale, and we're going to crush people. And again, are they doing it? So far, they're kind of doing it. That's the argument against it, economies of scale. All right, Dan.
Get in there. What do you think?
If this was anything other than a cult, this stock would be down 20% on this quarter right here. I'm just going to tell you that right now. This is an investing cult. And so when you look at you guys are saying that people were not surprised by the margin degradation. Why was the street consensus at 21% or something like that? Why is it? I mean, like, seriously.
Well, they cut this week. I don't know. I mean, I think a lot of the street expected this.
In any other consumer product where it's been an earnings story, a margin story, a free cash flow story, if you had an estimate of $3.2 billion in free cash flow and you printed 441 and you had $500 million in regulatory credits in a quarter, I mean, are you kidding me? Like, this is a joke. I mean, so in any other growth story, when you have this sort of just turnaround in the fundamentals of the company and you can argue away whatever you want, they've cut their price. How many times in the last 10 years have you guys seen a company cut their prices in a market leading product 6 times in 10 years, let alone 6 months? Okay. So listen, have at it, people. Go buy it. I'm sure it'll be up on the opening tomorrow. This stock is very likely to go back and retest those lows where it was.
But they are growing. I mean, and again, it feels so awful to be going on the opposite, but this is what we do on this show. So here I am saying they are growing. I mean, they're growing dramatically. I mean, they're growing in terms of their profitability. They're growing in terms of their deliveries. So if you think it's a growth story, if they're going to grow at 50% a year for the foreseeable, and they've kind of been very vague about this,
right here.
I'm not saying that though. I mean, come on, I'm not going to go buy the stock.
See why people might.
Yeah.
He can see why people might.
Well, they will.
And you can't see why people might.
Well, I don't know why this is such a special story. I think that article in the Wall Street Journal the other day talking about this Shanghai auto event where there's literally dozens of local manufacturers of EVs there, and you just mentioned the Boyd at 11,000 or something like that. I mean, they didn't show up because they got nothing new to show, okay? And they have tons of competition. So I think China is really, and we've been saying that on this desk, I mean, China's a real problem for them. I mean, it's a huge problem because so much of their growth is expected to come from there at a time where we've been talking about competition in Detroit. That's not even the story. The Germans, that's not even the story. It really is about China and future growth.